Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. The main event last week was the mid-year budget review by the Honorable Minister of Finance. And in that review, not much in terms of positive surprises, but some negative surprises with regard to initiatives and measures that are going to be put into place. Across the board, one of the measures would be the increase in the price of super gasoline as well as diesel. And that has across the board implications. Some of the other things, for example, the 7% intended levy on credit card purchases on the internet, that is due to come on stream sometime in September 2016. So it does not mean that there is an immediate effect. Then there were discussions in terms of the currency. And where is the currency, the exchange rate between the TT dollar and the US dollar, where is that pitched, and what are the likely implications for investors overall and citizens in general? Today, I will look at two areas covered by the Honorable Minister of Finance. The first is the area of the economy and the implications on GDP going forward. And the second would be fiscal operations and what is happening in order to achieve some sort of balance, or should I say financing the fiscal gap that has been identified. Let's turn first to the economy. Essentially, what we have seen and what we have heard is that the economy shrank some 2% in the calendar year 2015 and is expected to continue the decline in the year 2016, that is the calendar year, by a further 2%. These are significant figures when you think in terms of nominal GDP being somewhere in the vicinity of $165 billion. What's in it for investors and citizens generally? Well, the first is, as the economy shrinks, one could expect that there will be some adverse impact on the employment story, as we have already been seeing in the energy as well as non-energy sector. Now, notwithstanding the GDP, the energy sector is supposedly contributing about 37% to the overall economy at this point in time. It's something of a case of 1 from 10 leaves 0. Because whatever happens in that driving force, which is the energy sector, oil and gas, impacts across the board the entire economy. And therefore, what we can see is in the consumer sector, as employment falls away, as there is the additional imposition of value-added tax, and as the currency deteriorates somewhat, it is going to impact the consumer side of the story. Expect some fall in consumption. With the state of the economy, the local private sector, we are going to see some cutback on the investment side. And of course, we already know that government, which is the public sector, is going to cut back substantially, as has been mentioned in the budget. The cutback in expenditure from some $63 billion to $59 billion. What does it mean for you, the investor? Well, it's essentially some of these factors are going to impact adversely corporate earnings, especially those players in the capital markets and listed on the exchange that are more focused on trade and distribution relating to imports and resale in the local market. So those are some of the issues that you will have to face. We have already projected before the mid-year budget that the stock index will fall by some 3 to 5%. Because of the various measures that have been taken, we are going to have a look at Bourse again to see the implications of these new measures that have been implemented and are to be implemented before the end of the calendar year. So look out for those kinds of figures. Fiscal operations then, apart from the economy, let us look at the fiscal operations. What we have seen, as I've already mentioned, is a cutback in terms of expenditure by government from $63 billion to $59 billion. But on the other side, in terms of revenue, what you have seen as well is that the revenues are projected to or will be adjusted. The estimates have been adjusted from 60 billion to 52 billion. So what you see on your screen is a cutback and a shortfall. The fiscal gap, of course, is some $6.3 billion. And let's talk about that fiscal gap. That is the amount that is as yet to be funded, probably by borrowing. And essentially what the minister has said in terms of fiscal operations is, one, we have a gap of some $15 billion to be funded. That is expenditure, $59 billion, and current revenues, identifiable revenues as adjusted, of 44. Part of that $15 billion gap is going to be made up by one-off events. Some of them include the sale of some CLICO assets, MHIL, as well as the sale of the insurance portfolio. There are other aspects of it. We expect that borrowing will come from the local sector because no mention has been made of external borrowing. So what is going to happen with interest rates, what's happening in terms of the monetary implications, and the fiscal measures in particular. We are going to talk more about those things next week, but expect some deterioration on the investment portfolio. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.